They came out a couple of days ago, announced that they're basically going to sell their oil for gold from today until 30 days forward, so in the next month. And yeah, I think they multiplied the amount of gold they're going to buy from $10 million to $92 million a day. And it adds up to about, 30 tons for a month. So it's quite significant. And the timing and the announcement is interesting because you usually don't announce that kind of stuff. So maybe they're giving a kind of signal to the other BRICS nations.
In early 2022, just as the war with Ukraine began, Russia married the ruble to gold and created a new gold standard. The country announced plans to use its oil revenue windfall to purchase large amounts of gold this month. The report states that the finance ministry expects significant oil and gas revenue of 162 billion rubles in September, a huge jump compared to the 10.9 billion rubles generated in August. With that money, Russia plans to purchase more gold. In a recent development, MarioInnecco underscores that Russia has unveiled plans to exchange its oil for gold over 30 days, marking a significant boost in its gold acquisitions. According to Russian news agency Interfax, the government will increase its gold purchases from 1.12 billion rubles daily to 8.2 billion rubles daily for the next month. Regarding Russia's recent decision, Mario suggests it signals a shift within BRICS nations, with gold potentially playing a greater role as a reserve currency over the dollar. He observes a growing trend among non-Western nations to move away from dollar-based transactions in favor of other alternatives. BRICS countries have been steadily accumulating gold over the years, especially since the 2008 financial crisis. While the official reserves show substantial amounts, there is evidence that China and Russia may have even more gold than they have declared publicly. Consequently, Mario explains that his focus on precious metals stems from their ability to protect wealth during crises. He expresses concern about potential chaos in the West and stresses the importance of holding on to gold and silver. Now we present the clips of MarioInnecco's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
You have to be careful, I guess, now online what you say, but I try to stay away a little bit from the politics, and I try to focus on precious metals. And some people might say, "Oh, all you think about is money," but it's not true. It's just that precious metals and having savings, because that's what it is, protects you in times of crisis. And I think things are going to get chaotic in the West, and the trick will be to hold on to your gold and silver through the crisis, and see what happens after the dust settles. I just saw a post today by a guy that I follow, a Chinese guy from Hong Kong, and he was saying that his grandfather was a banker during before the China became communist in the Republic of China in Shanghai. And the nationalist government at the time, before 1949, in 1948, actually, they confiscated a lot of all the people's gold, but his grandfather was able to hide the gold for him and his clients. And eventually, they were able to move to Hong Kong and start again and thrive. But so that's what it means. It means you might have to move, but if you have your gold, you can go anywhere, and that's how it keeps you free. I think personally, I think it's really hard to try to fight the powers that be on an individual basis. Yeah, you have to basically fight for your self-reliance and sovereignty. That's the way I see it. They came out a couple of days ago, announced that they're basically going to sell their oil for gold from today until 30 days forward, so in the next month. They multiplied the amount of gold they're going to buy, from $10 million to $92 million a day, and it adds up to about 30 tons for a month. So it's quite significant. And the timing and the announcement is interesting because you usually don't announce that kind of stuff. So maybe they're giving a kind of signal to the other BRICS nations and other nations that are looking to attend the BRICS summit on October 22nd to 24th. That the way forward in the BRICS monetary, let's say, system is to have some gold. I'm not saying they're going to use gold to trade, but they could use gold as a reserve instead of the dollar. And I think a lot of these countries, they are not completely abandoning the dollar because maybe if they're doing business like China is still doing business with the US and other countries, if they have to buy stuff from the US, they'll have to use dollars. The only country that seems to not be in that situation right now is Russia because of all the sanctions. But like you said, I think yeah, that movement is growing. The rest of the world is saying, why do we need a middleman if we're going to deal amongst each other? Why do we need the dollar?
In discussing Turkey's bid for BRICS membership, MarioInnecco highlights their struggles with EU integration. He foresees the growing influence of BRICS, which remains underestimated by the West, could weaken the dollar and pound, driving up gold's value globally. Although concrete actions have yet to be taken to achieve this goal, a spokesperson for Turkey's ruling Justice and Development Party, Ömer Çelik, confirmed on September 3, 2024, that efforts are underway. This announcement follows President Recep Tayyip Erdogan's previous statement in June, where he clarified that Turkey's interest in BRICS membership does not suggest a shift away from its aspirations to join other international groups, particularly the European Union, where Turkey continues to be an official candidate. Turkey's request to join the BRICS alliance is seen as both strategic and symbolic as the 85 million-strong Eurasian country makes increasing strides in its influence and leverage on the global stage. According to Mario, the growing influence of BRICS nations over critical commodities will likely challenge the West's control over prices. He anticipates this shift could lead to increased costs and higher interest rates if Western economies don't adjust. Let's get back to the interview.
Turkey, I guess they want to. It's a country that is partly in Europe, even though it's a small part, and most of it in Asia. So they want both feet. You know, they try to play both sides. But the other reason why Turkey, I think, is applying for BRICS is that they never had any luck applying to be a part of the European Union. Europeans never really were too keen on having them. And yes, the fact that they're part of NATO is a huge thing as well. I think after the US, they've got the biggest armed forces in NATO, Turkey. And like you said, in the beginning of the year, I think it was 6 or 7 countries that actually joined BRICS. Saudi Arabia, they're supposed to have joined, and I think they have, but they're not really publicizing it. And there's going to be 47, I think, guest countries going to the BRICS summit in October. And recently, I think there was an IMF meeting run by Russia in Moscow, and like 140 countries attended. So yeah, it's huge, and I think it's still underestimated by the West, the mainstream in the West, by Wall Street, by the City of London. They still kind of the view they have is that, well, they'll never challenge us, but I think they're wrong. And I'm not saying this because I'm pro BRICS, but just because it's going to affect us here in the UK and the US, because as I've said many times, what it will mean is that these countries are going to need our currencies a lot less. And that means they're not going to really be buying as much of our currencies or investing as much in our currencies. So they're going to become worth less and less. And that's just going to hurt, aside from all the debts and borrowing that we're doing in the West and deficit spending. That's also going to hurt the purchasing power of our currencies. And, and that's why gold keeps going higher and higher versus all currencies, even the BRICS currencies, but it's going to particularly hurt us in the West. I think the biggest way it's going to affect us is that the BRICS countries that already are in place, 10 or 11, they control a lot of commodities, hard assets, energy, and the other countries that want to join the same. They're mostly in Asia and Africa. And what that means is that it's not going to be as easy for the West to control commodities and commodities prices, and we're going to have to pay more for it. I think it's the ex-guy from Credit Suisse. I forgot his name. He's got a Hungarian name, but he said that there's like a war now for commodities, and BRICS are they're gonna control the commodities and hard assets. So unless the U.S. And the West, let's say Europe, allow their economies to develop and to exploit for commodities, which is something that doesn't look like they want to do with this Green New Deal and green agenda. And they seem to not want to allow for extraction of minerals. Things are going to get a lot worse, I think. And the other thing is if our currencies are not, let's say if countries around the world don't buy as many treasuries or as many gilts in the UK or European government bonds, that means that unless the central banks start QE and buying these bonds, interest rates are going to be higher than they normally would have been, and that's going to hurt our economies. And I know interest rates have been going down, but I think they probably would have gone down even more if we weren't having so much trouble in the world with sanctions, with BRICS. Because if we're cooperating with the rest of the world, they wouldn't have a reason to start a BRICS block or anything. They'd be cooperating with us. So that's why it will hurt us.
The collective economic strength of BRICS nations significantly influences global markets. Coin Price Forecast predicts that the price of precious metals will rise to $4,649 per ounce between 2026 and 2030. The trend towards gold as a reserve asset suggests a substantial transformation in global economic structures. How do you think the rising influence of BRICS on global commodities will impact your investment strategy in the coming years? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.